inflation will remain quite low in the coming months. As these temporary effects fade, and importantly, as the labor market improves further, we expect inflation to move gradually back toward our 2% objective.
They would have been worried about giving the market a surprise. There was a 34% probability of a rate rise. They didn't do that. And I think the really big thing was that only one person voted against. And the reason was that the data really didn't sustain going. The two reasons, actually, they gave were China and no inflation. So it's really not a surprise. I think the story that people have to understand is that there really isn't a plan, if you like, to get out. They're really following the data.
Financial conditions, U.S. high yield, European high yield, have widened out. Financial conditions have tightened, and emerging markets have suffered as a result of that. But the point is that financial conditions have tightened not because the U.S. economy is very weak or because the European economy is very weak, but it's because commodity prices have been very poor because of China. So I do think that emerging markets are having a global impact in that respect. And eventually, I mean, if the U.S. Fed does hike and adds to the risk-free rate problem along with the risk premium problem, I think emerging market assets will come under further pressure.
Since summer, we've seen break-even inflation rates give up three-quarters of the gains that they made since the beginning of the year. And so that's something that would be bizarre for the Fed to ignore. So I think the truth of it is they did think they'd be able to go. Yep. Stuff happened, which means they can't go. They still think they will be able to go. And furthermore, what's new from yesterday is she gave a reason that she wants to go, which is we don't want to fall behind. We don't want to raise rates more quickly later.
I don't think it will happen, though obviously that door is still open. But I think, when you look at what was said yesterday, it was quite clear. Global conditions may restrain economic activity, and it is putting, downward pressure on the rate of inflation in the U.S., and that is something that is of concern to the Fed. So I think that they certainly have the opportunity to delay. I think Yellen ideally would have liked to have been able to raise rates starting sometime this fall. But the realities of the world's current condition, I think, is going to probably push that into 2016.